Hey guys, it is Julie here with TipRanks, and today we're taking a look at two recent buy ratings from the #1 ranked analyst on TipRanks. So let's get into it. Alright guys, welcome back and thank you all so much for being here. TipRanks has rankings on over 8,300 Wall Street analysts, helping you know who to trust. So when the #1 ranked analyst makes a couple new buy recommendations, it's worth taking a second look, and that's exactly what we're doing today. Just before we get into those, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel, and download the TipRanks mobile app using the link down below so you can access the wisdom of these thousands of Wall Street analysts on the go. Now, let's dive right in. From the Expert Center, we're taking a look at a list of the top Wall Street analysts, and in the #1 position here, we have Jason Seidl from Cohen & Co. Taking a look here, he is ranked #1 out of over 8,300 Wall Street analysts with a 74% success rate in the last year, an average return of over 25%. Looking in the last 2 years, it gets better with an 80% success rate. Now, he covers the services section and recently came in with a reiterated buy on Knight Transportation. Knight Transportation trades under the ticker KNX. With a market cap of over $9 billion, the stock currently trades just above $57 per share. They have seen gains of 18% in this past year, but are fairly flat over the last few months. Knight Transportation is part of North America's largest truckload fleet, with 1.2 million miles driven daily. They have an unmatched fleet size and trailer pool, with over 11,000 trailers and 4,000 trucks across 25 different terminals in the U.S. The company has recently said that they've been navigating a challenging freight environment, and in their first quarter they saw unusually soft demand. And that was reflected in their Q1 earnings report that came out just yesterday on the 20th. The company reported earnings per share of 73 cents, which fell short of analyst expectations. On the revenue side, they did exceed estimates, coming in at $1.64 billion compared to the $1.61 estimated. The company said that they expect the general weakness in shipping demand to persist through the spring, but sees improved business conditions for carriers in the back half of the year. While the stock isn't necessarily very popular among investors, we have seen an uptick in the portfolios holding them. Top performing portfolios with the stock is only 0.1%, but over the last 30 days, we haven't seen an increase of 11.5%. And we've seen a slight uptick in the hedge funds holding them as well, with an increase of over 95,000 shares in the last quarter. That includes a couple brand new positions as well. And it is worth noting that the Knight Transportation stock also pays a dividend. It is a quarterly dividend of 14 cents per share for a current dividend yield of about 0.9%. And that payout ratio is extremely healthy at below 10%. Now, despite that earnings miss, we have plenty of analysts reiterating price targets just today. I know I already said that Jason came in with a buy rating, but let's see how the others weigh in. Overall, the Knight Transportation stock comes in as a moderate buy based on 14 ratings with 11 buys, 2 holds, and 1 sell. The average price target of $66 implies an upside potential of 16% from current prices. And looking at our detailed list here, you can see all of those price targets being reiterated today. Our #1 ranked analyst Jason here came in with a buy at $67, which would be an upside of nearly 17%. We do have a sell rating from 10 days ago with a downside of 4%, and on the high end we do have a price target with an upside of 25%. Now, heading back to Jason's list of stock coverage, his other recent buy rating came in just yesterday with Union Pacific. Union Pacific is one of America's most recognized companies, trading under the ticker UNP. They have a market cap of over $122 billion, trading right around $200 per share. Now, they have had a more volatile year, currently down nearly 16%, down just a few percent over the last few months. Union Pacific is primarily a railway and freight transportation company and has been in operation for 160 years. They connect 23 states in the western two-thirds of the country by rail, providing a critical link in the global supply chain. They have over 8 million annual carloads with nearly 7,500 locomotives and over 32,000 employees. Despite facing some challenging weather events, Union Pacific did just report their earnings yesterday, and they did beat on earnings. With $6 billion of sales, they've reported earnings per share of $2.67, coming in 10 cents ahead of analyst expectations. Along with this earnings beat, the company also maintained their future outlook. Union Pacific also pays a dividend of $1.30 per share on a quarterly basis for a dividend yield of 2.61%. And of course, spurred by this recent earnings report, we have plenty of analyst ratings being reiterated just today. Overall, their stock has 20 analyst ratings, coming in as a moderate buy with 11 buys and 9 holds. The average price target comes in at $220 for an upside about 10%, and we do have a bit of a wider range here with a high end of $245 and a low at $176. Taking a look at our detailed list of ratings, of course, we have our top analyst here, Jason, who came in with a buy and an upside of over 8%. Then we do have a one-star analyst coming in today with a hold and a downside of 15%, and the rest ranging in between. So there we have 2 stocks with reiterated buy ratings from the top ranked analysts on TipRanks. Let me know your thoughts in the comments down below. Were these stocks on your radar before, and what do you think of their future growth potential? I always appreciate hearing from you guys. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.